Welcome to the StockMiner.com studios. I'm your StockMiner Brian Johnson, and we're heading into a new week of trading. Some good action at the end of last week. You can see all of the little white bars up. Where do they look like they want to go? Right back to the big blue line. Who wouldn't, right? Of course. So this is where I think we are ultimately heading. Lots of different scenarios to get there. Lots of different scenarios as to what we'll do when we get there. And fact is, we don't really care here at the Stockminer. We just wait for breaks. Wait for breaks, take our conservative, cautious entries, and run with them. See where they take us now. Obviously, a break above that blue line, if it happens early, might not be a bad place to look at a little bit of a long position there. I'd still be very cautious. That run up on Friday, guys, was very quick, very fast. It got very slow towards the end of the day. And I do believe that a pullback is coming, if nothing else. Maybe another drop is coming. Maybe just a pullback is coming. Point being, I'm very... I think I'm very unwilling at this point to start playing stuff to the long side, especially out of the opening gate on Monday. I'd be very cautious with that. So we do have lots of stuff above us. We have 10-200. That's the previous little support line here. Should act as a little bit of resistance, mostly because of the big blue line on the drop down here. We have 10-250, we have 10-300. There's just a lot to get through. And after this big run up on Friday, it'd be hard for me to believe that it would just continue up in this same fashion for another 200, 150, 200, 300 points, whatever it might be, before actually pulling back or moving down. So I'd be very patient, very cautious with your trading coming early into the week. The bigger picture, guys, is really very simple, though. Big blue. We're looking for not only moves above big blue, but closes above this big blue line. Maybe a pullback, maybe a move up gets us past it, then we come back to retest it, then we take off from there. Maybe it hits big blue and starts to drop like a rock. Those scenarios all on the table. Once again, coming into the beginning of the week, I can build you a very strong bull case and a very strong bear case. I am only guessing here. I would assume that a lot of people are maybe bearish at this moment, but I'm telling you, you've got to keep your head neutral. There is a very strong bull case that can be built here too. So, overall, bigger picture, let's take a look at the daily here. I still have to be neutral bearish from a daily time frame because of the action that we've seen so far. No reason to get too panicked about it yet from a bear side, even though this was a huge push up on Friday. But the bulls have more work and a lot more work to do before they really start to get us out of this little drop that we've been seeing here lately. Blue line, still the big one. 10-278, still the 50. I mean, lots of things to look at above us, so be very cautious if you're going to go long. You might have to take very, very small profits on the way up, but you know what? That's the market. Just take what it'll give you. And by the end of the week, I think if you look back, you'll be very, very surprised at what you've made. It's not hard to pull $20 here, $15 there, maybe $40, or get a good run of $50 or $60. And by the end of the week, all of a sudden you look back thinking, I didn't do anything this week. And you look back and you've made 200, 300, 400, 500 bucks. That's not uncommon. I do that quite a bit in my trading. Take little small trades all week long. By the end of the week, I think, oh man, I had terrible week, and look back and have done really actually pretty well. So be cautious to the upside right here. The bulls have something they still need to prove. Same thing on the NASDAQ here, 60-minute coming back up. Didn't break to these new highs yet, which has really got me kind of curious here. You'll notice that while a lot of the other indices are breaking through the top of this area, the NASDAQ has not done that yet. Not saying it won't, but if it does, it's going to have to get through big blue. It's going to cause problems up here. Watch this very closely early in the week. NASDAQ on a daily, look at this. This is what I was talking about. The gap down, the bullish engulfing, the dark cloud cover, the hammer. I don't know. How many more reversal signs can we get? Very, very tricky trading from a swing trader's perspective. Decent trading from a day trader's perspective because at least we were moving. We weren't sideways all day long. But Big Blue is still the one to watch. We get back below 1725 in the NDX, and I think you need to be very cautious about these NASDAQ stocks, Apple included. It's on the precipice of something that could be very big right here if it doesn't turn around quick. The weekly gave us a nice bounce off the 200-week moving average. Further pushes below that 200 really could lead us lower. Got to be watching that very closely over the next week or probably two. I'm not so sure that we don't bounce around sideways, guys, for a while. That's very possible, too. I'd watch this 1900 to 1941 range in the NASDAQ and see if we get breaks one way or the other from that perspective. SPX on a 60-minute coming up to also visit Big Blue. We're just a few points away from it. Maybe a gap up tomorrow to start. If we gap up just below this blue line, maybe then it starts down for the day. Gets everybody psyched into thinking, okay, Monday's going to be a good start, and then it moves down. Very possible. Notice how it did break this area here and this area here, so I just think this is a very plausible place to go for the SPX. Could happen early tomorrow. It might not happen for the next couple days, but I think it really feels like it wants to go there. I would say tomorrow sometime we would see this area touched. From a daily, pushing back up as well, watching Big Blue with these huge moving averages right above us. So breaks above this blue line, guys, could change things from a bearish perspective, and that's why we need to really be watching the blue line. That's up there around 1070-ish right now. Next candle will open just sideways of this, and 1070 should be about that blue line. So between 1060, I'm going to say about 1065 to 1070, really kind of a no-fly zone. I'd be very cautious there. Next, chances for moves to the upside, maybe above 1085, but you've got the 20-day. 1100 is really, really, really your safest place to start getting long the SPX. Otherwise, if you're going to play it long, you got to be very nimble about taking profits on the way up here if it continues that direction. On the moves down, we're still watching breaks of this 1040-ish level down here. Below 1039, guys, could be bombs away in the SPX and the rest of the indices. That's what you'll need to be watching closely as well for the bearish side of things. Breaks below that and ultimately below 1010, and it could be all over. That would confirm quite a few things for us as well, especially from the bearish side. So as it stands, would not be surprised if maybe we just toddled sideways here for, who knows, a week, 2 weeks, a few days, could be anything. Your breaks are pretty clean for me on the SPX, both bearish and bullish. VIX on a daily, I added this extra line up top here. This is kind of my last line in the sand type thing where I got the very, very tippy tops of these things. Still puts us in a falling wedge. I kept the original line from last week, which is the thin blue line now. I think both are very valid. And point being, if you want to play the VIX from a TA standpoint, this is still a falling wedge, which means that any break to the upside still lends itself to a major move down in the markets. From a weekly perspective, same thing. We're trapped within all this junk right here. It's much more clean on a daily. As you can see, just a much cleaner chart from that perspective. So we won't worry about the weekly on the VIX for the time being until we break below 20 or above 30. Apple on a 60-minute here, you can see added an extra line here, watching for breaks above that line. As it creeps maybe back up, depending on what the markets decide to do, Apple has not been the strongest stock in the world these last few days or even weeks. You can see consolidate, consolidate, bleed to death. That's all we've seen. Coming right back, though, into very, very strong support back here. 231, 65, 200-day moving average. Yeah, that's a big one for Apple. From a weekly too, look at this, hanging on to this lower support line. Still has a chance. The bulls still have a chance to move this thing back up. It honestly wouldn't surprise me if that's what we saw coming into the next few weeks, or maybe some sideways action here where we bounce around for a while. But you just, for those of you that are long-term Apple and you're long-term bullish Apple, especially those fanboys out there of Apple, and I know you're out there, you're all laughing at me right now because you know it's true, that Apple doesn't always have to go up. So you need to be cautious if you're invested heavily in Apple and just hoping for the best. You know, it can pull back, go back to 08 and see what it did. How many wouldn't love to be buying Apple at 79 again? Yeah, raise your hand. That's me. My hand's up. So it can go down. You just want to protect yourself. It depends on what your strategy is. If you're long term, maybe you don't care. But if you're looking at it from the next year or two and this thing starts to drop, maybe you want to try to get out and buy it back down here in one of these lower levels if it reaches those areas again. FAS 60-minute, look right up to blue, waiting for breaks above that. I like it above 19, and I really like it above 1950 ultimately to the long side. Below 17 to the short side on FAS. From a daily as well, above 19. above 1950. All of those are good plays, keeping in mind that 1975-ish or so up here around the 20 mark is some good overhead resistance. It's light, it's not as strong as it was, but it still will probably slow us down, and the moving averages, of course, will slow us down in that case. So watch this closely over the next couple days. Same with FAZ. This is what I'm seeing on FAZ right now. We just might have poked our way out of the bottom of this. If that's the case, this is a broken formation, but as it stands right now, it is a bull flag. Bull flags are bullish, so we may see a move upwards here, but you want to wait for breaks up and above 1750, 1775. Way more cautious entry up in that area. Notice how we're holding the 200-day moving average beautifully. Still, for the time being, till something changes, just a pullback, just kind of pulling back here a little bit. Breaks below 16, I probably wouldn't want to be long this FAZ at that point. Could move down into these moving averages at that point. So be watching this closely. That's it for today. Good luck with your trading tomorrow, and we will see you tomorrow night. Bye.